I would like to dedicate this video to Mr. Pramod Namdar because this is the email that he has sent me. I want to address this email. I am a SEBI-registered research analyst, so please have a look at my disclaimer in the description box. This is what he writes. He says, "Hi Rohit. Good morning, Rohit. Hope you are doing well. Below is a stock which is in confirmed stage 2 uptrend, which is near to pivot buy range." So he has sent this screenshot. He has not mentioned the name of the stock. So should I enter the stock if it enters the blue range or wait for point 4 to be created, considering it passed all 5 kinds of analysis? So the question is, see, this is the base that he has drawn. Now there are 3 points in the base. This is point 1. Then this is point 2 somewhere here. Here somewhere it is point 3. Then if the next candle is a mother baby candle combination or an inside bar, then that would be completing point 4. So he's saying, since the price is already inside the green zone, should I wait for the candle to form the point 4, or inside this blue zone, which is 5% above the pivot point? This is the pivot point. So there is a blue zone here, which is 5% from the upper line of the green zone. So he's saying, should I buy there or should I wait for the base to complete point 4? Considering it passed all 5 kinds of analysis. So he's talking about this analysis: liquidity, comparative, technical, fundamental, market. So assuming a stock meets all of this criteria, then he is asking, if this is the situation, what to do? My answer to that question would be, you wait for point 4 to get completed. Okay, if the point 4 does not get completed and stock suddenly moves up, goes into the blue zone, pick it up on the blue zone, whatever happens first. Because sometimes what happens is the stock does not create point 4, starts moving up, goes into that weekly buy range. So we can pick up the stock there as long as the moving averages of the stock are aligned on the daily time frame chart. So here you can see blue, green, red, they are all aligned. So if the stock does not form point 4, buy the stock on a weekly time frame chart. If the stock forms point 4, buy the stock on the daily time frame chart. My priority is daily time frame chart, because on the daily time frame chart sometimes you might get an early entry. Here you are getting an entry at near the pivot point, but sometimes you might get an entry near the lower end of the green zone. That's called as an early entry on a daily time frame chart. So my answer would be, whichever comes first. You have to enter the stock assuming the stock meets all 5 kinds of criteria, all 5 kinds of analysis. Then he says, what I have planned is buy 50% as soon as it enters the blue zone with high volumes, 40% above average volume, and rest I would buy at a retest of 21-day EMA. Is my entry planning right here? No, the entry planning is wrong, because a retest of 21-day EMA is called as a pullback trade. Okay, I don't talk about pullback trading on this channel as of now. But a pullback trade is a trade that you take only when the market is in a confirmed uptrend. What if the market is uptrend under pressure, or rally attempt, or confirmed downtrend? You are not allowed to take a pullback trade. I mean, you are allowed, you can do anything you want. You can take a pullback trade, but the risk is very high. So there is a guy called Charles Harris. He's a veteran trader. He was working with William O'Neill and Company for many years. He is known for pullback trading. He is known in the company as a pullback trader. So just go to YouTube, type Charles Harris, also type Richard Moglen. You will find the video where uh, Charles Harris gives an entire presentation on how to do pullback trading. In that video, he talks about how to take a pullback trade only when the market is in a confirmed uptrend. So this entry planning is wrong. You can't take a trade anytime. For a pullback trading, a lot of other criteria has to be met as well. And it's not just 21-day EMA, it could also be 50 SMA. Okay. Next, buy 50% as soon as it enters blue zone. Well, let's say it enters the blue zone. Well, it meets your entire criteria, right? Your five kinds of analysis. If it meets everything, then why to buy 50%? Why not buy full position? So, for example, you plan to buy 10% position size. Why not take 10% position size there? Or why not do 50, 30, 20 inside the blue zone itself? Why to wait for a retest? What if it doesn't come down and retest? What if it suddenly shoots up? 40% above average volume, this is weekly volume, okay? Because if you're taking the trade on the inside the blue zone, then you'll have to check the volume on the weekly time frame chart. 40% above average volume, which means you are saying that, let's say the stock enters on Monday, Monday, Tuesday, the stock enters the blue zone. You are saying that in the first 1 or 2 days, the stock will go beyond the blue line on the weekly time frame chart on volume and it will exceed 40%. That is not going to happen. Okay. So, for example, let's say the stock has 1 million average weekly volume. So, roughly, you should expect 200,000 shares to be traded every day, like Monday, Tuesday. So, if you see that the stock enters the blue zone by Tuesday, you should expect 400,000 shares to be traded. But if you see 600,000 shares or 500,000 shares, then you can say, okay, compared to expected, what percent is it up? So if you are saying 40% above average volume, 40% above pro rata average volume, it's not 40% above average volume, it is 40% above pro rata average volume. So if the weekly volume average is 1 million, then pro rata basis Monday, you should have 200,000 shares to be traded. So let's say Monday, Tuesday, 400,000 shares to be traded. So if you go 40% above 400,000, if that much volume you are getting and the stock is inside blue zone, makes sense to take the full position because it is meeting all the criteria. So you could do 50, 30, 20, but even for the first 50, you have to look for volume confirmation, right? So as to reduce your risk. So the entry planning here is not correct. You have to put a lot of thought process before executing the trade because it has taken a lot to just arrive at a particular stock. Now you can't mess up in trading execution. Even on a daily time frame chart, when you are taking the trade, even in a daily time frame chart, when you are taking the trade, you have to look out for volume. So if the average daily volume is, let's say, 1 million shares traded, and in less than 1 hour, the stock exceeds 2 million volume, that's a high volume day. That's when you can take the trade. There is no fixed rule for volume, but just by looking at the price and the volume, you know that this is going to be a high volume breakout day. Thank you so much.